Good morning. This is Mark Soderberg with ADM Investor Services with your early morning grain outlook for Tuesday, November the 28th. Prices this morning, a lot of green on the screen and what I would essentially describe as the proverbial dead cat bounce, particularly for the grains. Speculative traders last week sold just over 22,000 contracts of corn. With a little bit of more selling here the past three sessions, we've now got the money manager short position just over 190,000 contracts, and that would be the largest since July of 2020. In wheat, the CFTC showed big selling as well, 19,000 contracts in Chicago, just over 10,000 contracts in Kansas City. We've got the speculative short position in Chicago at nearly 115,000 contracts, while in KC it's now likely approaching 50,000 contracts, and that would be the largest in Kansas City since May of 2019. And that's when they carved out a record short position at almost 60,000 contracts. CFTC didn't show much change in the soy complex. Right now we've got speculative traders long about 65,000 beans, 131,000 in the meal, and short about 10,000 in the bean oil. Open interest in D's corn was down nearly another 60,000 contracts yesterday, and that makes it about 132,000 in the last two sessions alone, ahead of first notice day on Thursday. Expect some deliveries, although registrations right now are light. Look for heavy wheat deliveries with registrations there at nearly 3,000 contracts. While corn export commitments are decent, they're running up 27% over a year ago versus USDA forecasts of up 22%. Export inspections yesterday were a marketing year low, and that seems just without a significantly lower production estimates out of South America. I think we're going to struggle to reach the current USDA export forecast at nearly 2.1 billion bushels. Our meteorologist at World Weather seems pretty confident that weather conditions and crop prospects in South America are on the upswing, that despite problems to date, the crop is going in the ground, albeit at a slower than normal pace. AgRuel yesterday placed Brazil's first corn crop plantings at 83%. Complete soybean planting 74%. That was up from 68% last week, and behind the year-ago pace at 87%. So we're running roughly a week to 10 days behind the norm there. U.S. corn harvest has reached 96% complete, in line with the historical averages. Winter wheat conditions did improve another 2% and good to excellent to 50%. That's slightly better than expected and well above the 34% from a year ago. Korean Feed Association did pass on a recent corn tender, citing that prices were a bit too high. Another Korean feed group did purchase roughly 130,000 metric tons of corn, with at least half of that coming from South American origin. A South Korean flour mill also reportedly bought 95,000 metric tons of U.S. or Canadian milling wheat, and Jordan is also tendering for 120,000 tons of wheat. Russia reports their grain harvest is now 98% complete, with just over 151 million metric tons gathered. Of that, they claim 99 million metric tons of wheat. That's well above the USDA estimate at 90 million metric tons. D's 23 corn, our spot corn, has major support on the charts at 455. That is the 100-month moving average, a figure that we have not been below since late 2020. Short-term Jan 24 beans is stuck between its 50 and 100-day moving averages, 1325 to 1347. D's meal is consolidating right around the $460 per ton level. And all three classes of wheat made new multi-year lows yesterday. Spreads are wide, funds are heavily short, and keep rolling these positions forward, capturing the carry in the marketplace, seemingly until something comes along to disrupt that supply. But with another bumper crop from Russia, it seems like any modest rallies seem to be selling opportunities. Thank you for listening. Hope you all have a wonderful day.